Alrighty, so today I'm going to be giving you guys a day trading recap. I might be starting a how to trade playlist. I know I got some recommendations for that. So basically I'm just going to be giving over my entries, my exits, and my thought processes behind them. And we're going to talk a little bit about trade management, how to plan your trades, and all that great stuff. So the first trade of the day was a Facebook call. And basically looking at the daily chart, we had just had an all-time high at 247.39. That marks this fat green line, and we were pushing up. We formed a nice bull flag, and then we started to pop right about here. So this is where I entered Facebook calls, just one Facebook call. And I was risking off of the recent low pivot. So you always want to risk off the recent low pivot, because if that breaks, that means it's likely to continue a downtrend. If I wanted to, I could have risked a little bit more, but these contracts are pretty volatile, so I didn't really want to. So we got a nice huge push up, and actually right up here, I could have taken $55 or $60, and I didn't. But there's a big reason for that. Like, why wouldn't you take $55 or $60? Well, it's because in the long run, you have to have a trading plan. And the trading plan, my trading plan says, I need to at least take 2R, meaning, okay, if I'm risking, 0.35%, that means I need about 0.7% for me to take my target. And that was a little bit over 250 on Facebook. And so we just never got that. And so what's in my rules is if we go about 1R, which was about 1 times the risk, what I had, I'm allowed myself to let it go to break even. And so what I did was I put a trailing stop in, and then I got tagged out right on this fat red candle right here. And so that whole trade resulted in a nice whopping $4 loss. Even though it was above where I got in, there's a little bit of decay in the contract, so that was a minus $4 expense trade. So that was kind of the first trade. The next trade I took was on Target. And I had a swing trade on earlier that I exited right in front of 120, but that's besides the point. That was when the premium was nice and high. But basically, when you're trading, you always want to have an entry, a stop, and a target. And you need to get really good at placing these correctly. And I'm going to kind of show you how you want to structure your trade on where there's support on the chart. That's where you want to place your stop loss just below the support. And so that's how you're going to protect yourself and have small wins, but small losses, and bigger wins. You want to risk 1 to make 2. So right over here on Target, we got a push over 120. 120 was a tested level many times on the daily chart. And before, we'll talk about the SPY dump at the end, but before this point, we had just broken resistance over here, and we were starting to get going. So I entered a call, and my stop loss was just below here. I think I put in like a 25-30 cent stop loss. And look, we just formed a nice little bull flag, consolidated a bit. And what I actually like to do is I like to average up. If you're winning on a trade, if a trade is making you money, it's okay to average up, to pay more instead of averaging down. You don't want to get into the habit of averaging down, but it's all based on your style of trading. And the way you find your style of trading is you keep a log. I mean, I've been logging stuff for many years at a time, and every single trade, thoughts, entry, exit, things I could have done better, things I could have done worse. And so that's kind of how you find what works for you and what doesn't. So very important to have a trade log. So very important you have the date, the ticker, what kind of trade did you do, the cost of it, your exit, your total profit, the percent gain and loss, and then like your notes. Okay? So we added right here on Target, and then we got a nice push up right to 121. Hold numbers are nice resistances, so I took one off. And I want to hold the other contract. Usually I buy one contract that is shorter expiration, and then one contract that's longer expiration. And so that way I can take some profits off with the volatile contract and then hold the less volatile contract for something big. And actually, I didn't get to catch the rest of this move in target because I put in a trail stop. And that goes back to your trade style and trade adjustment. You can be right on a trade, right on the direction, but it just did, the stock just, the regular volatility of the market can take you out. So I put in a trail stop of 55 cents. It was actually tagged out. And so we actually took only $4 from target today after all that work. So it shows that you can be right on direction, but sometimes not make a lot of money because of your management. But remember, your management is what's going to keep you in the game. Remember, entry, stop, target, and get good at adjusting those. If you don't have your stop or your target, you're basically just gambling. Just going back to the Facebook trade, if I just would have taken it at $60, that's going to skew the probabilities in the long run. And by skewing the probabilities, it's just as much gambling to take profits early as it is to not take a stop loss. So find your trading plan, find what works for you, stick to those targets, and then let's get into the best trade of the day, work. And work was basically when we're day trading, we want to have done our homework on the bigger time frame charts. And on the bigger time frame charts, let's go to the daily chart. We can see work had this huge. So actually, I'm going to clear this, and I can draw this, and we can have this thought process together. But work had a huge move down, and then we stayed in this nice tight range for quite a while. And I was kind of watching, saying, okay, this is a bear flag until it's not. And today we started to break out. Don't mind this tail candle. This is the after the markets close, but we just got above the top of the bear flag, and if we get it on top of the bear flag, that means that the bear flag is no longer a bear flag. And bear flags, remember, huge move down, sideways consolidation. These generally break down to the downside, so be careful for that. But since for the time being, we had broken above, and we are holding it as support. Let's go to the fast time frame, 1 minute. So this is the support we were talking about. We were holding on top of it, and then we started to pop above, and then we were just holding nicely. And then right about here, I was like, okay, we're getting on top of the bear flag. We see SPY at the time is pushing up nicely. Let's go back to work real quick. SPY was pushing up nicely, and so we went ahead and got long, and you can see these trades live if you want to watch the replays of the live stream. We're calling these trades out live, but I just went ahead and got one contract for this week, right about there. And then once we broke above this little recent high, I added another contract, and then look, we held it as support, formed another flag pattern, a nice consolidation, move up, consolidation, and then look at this. Look at the high of the day. Look at the volume increase, huge volume increase. That's exactly what you want to see when we're breaking resistance. We broke resistance. I took one contract off on this nice fat green candle, and then we rode it up. And we rode it up all the way to 35.60. So from my first entry, right about here, or was it right about here? I don't know. I was risking to $34, so just under $34, so risking about 2%. So my target was a little bit about over 4%, or about $1. So I was risking 50 cents to make $1. So I took my first contract out right about there in the middle of this fat green candle. It's easy to sell when you get nice pushes in your favor. It's strong liquidity. You're going to get great fills. You're going to be able to get out nice and smoothly. That way you book some profits and you can ride some more. And then the second contract, we rode just until there. And then boom, that was that work trade. And from that work trade, we spent $402. This is between all accounts on the Webull and stuff. And we were able to get away with $119 in revenue. So 99 on here, and then another bit on Webull. So that's the work trade. And then the last few trades of the day were SPY. And SPY, I like to kind of hop in and out because SPY is generally a very choppy ETF. And so I wanted to catch it earlier today on this nice little bull flag, but I just didn't feel like the risk was worth it. I was already in work for that day trade, but basically we got a nice break of resistance. I bought a contract, same day call option, just one contract for like $50 or $60. And look, we peeled one off right there. So extending into this prior pivot from the daily chart where there was a lot of congestion of resistance, and I was calling it out in the chat that hey, we might see a bigger sell-off or a rejection at any point now. So just be careful with your long trades. And so peeled one off there, but then I saw we started to base. We didn't even get back to support. I entered again, and I peeled another one off because I just felt like we were kind of stalling off. And then we got this nasty little tail candle, and then we started to roll over, and I got out right there. This is right in front of these prior resistances. And then I had a few contracts at this point, and I actually reloaded another contract right here, but then we started to break support. So I broke support, and then I took my stop loss, and then we broke the second support, and I took my second stop loss, and then we started to really roll over. So those trades are kind of shown right here. There's a $20 loss, there's a $35 loss, broke bull flag support, kind of right in the notes what's kind of going on. And then lastly, at the end of the day, I noticed that we bounced strongly from the low of the day, but then we were really coming crashing down. There was a lot of virus news going on. And I might talk about this in this video, but basically we got a SPY put, same day SPY put for $55. And then we got fast 2 red candles right in a row. I just took it right in front of support, sold my put right in front of support. And that was $55 into $81. If it'll load up. And that was just a nice $26 win. So of the day trading profit and loss, $127. You can see all my fills. Right up here if you want to pause the video and take a look. That's kind of how it looks real time, and SPY definitely had a rollover. And basically for tomorrow we're going to be looking at mRNA for a long. We're going to be looking at calls if it can get above 75 again. I'll watch mRNA. Target will be somewhere around 80. We can use maybe like a $2 stop loss, $2.50 stop loss since we have a $5 target. And then just remember that SPY might see a bit of rollover tomorrow in the next few days. We gapped up and got above. We got above like recent resistances, and we're doing great. And then we had this nice bull flag. We had this nice bull flag. Huge move up, sideways consolidation. We even broke the bull flag. Buyers bought, and then look, we rolled over. That's a bearish sign. It's a false breakout. It's called a jab or a recapture. Broke support, and then look, we broke the low of the day on high volume, fat red candle, and we closed below many important pivots. We closed below 318.37. We closed below 317.70. That was the gap from the gap up over the weekend, and then we even closed below an important breakdown candle high from earlier, which was 315.50. If we can get this, that was right about here, 315.50. That was an important breakdown candle high. Close the day below it. We might see some downside. So be mindful of tomorrow and the next few days. Watch your positions carefully. And let me know if you have any questions, want to see more of these type of videos, if you don't want to see more of these type of videos. And yeah, have a good day. See ya.